With 2025 around the corner, traders are reflecting on their strategies and setting ambitious goals for the new year. This video outlines a structured, step-by-step pathway for reaching six-figure profitability by the end of 2025, starting with just $100. Whether you're an experienced trader or a novice, follow these 10 steps in reverse order to methodically work toward your trading goals. Start with self-assessment. Are you Trader A or Trader B? The first step in creating a profitable trading strategy is understanding where you currently stand. We define two types of traders: Trader A, who has an established profitable trading edge, and Trader B, a beginner who needs to build foundational skills. Trader A is ready to start trading immediately, while Trader B will need to focus on learning the essentials before putting money into the market. This distinction is critical for selecting a pathway that aligns with your experience and goals, setting you up for success. Determine your starting capital requirements. For each trader type, the capital requirements differ significantly based on experience level and readiness to start trading. Trader A, with prior experience and a proven edge, needs only $100 to begin. This amount covers the cost of two $5,000 trading challenges, allowing Trader A to immediately put their knowledge to use and start generating returns. Trader B, however, requires a slightly larger initial investment of $200 to ensure they develop a strong foundation. This is divided into $100 for quality educational resources and another $100 for their initial trading challenges once they've built core skills. While Trader B's journey involves a longer preparation phase, this investment in learning establishes the groundwork for sustainable long-term profitability. By identifying and committing to this starting capital, both types of traders can set a realistic and achievable base to build towards six-figure returns in 2025. Build core trading skills for success. Trader B should dedicate 3 months, from October 2024 to January 2025, to learning key trading skills. This foundational phase covers 4 critical areas: a profitable edge, risk management, trading psychology, and money management. A profitable edge is a strategy or approach that consistently generates returns, requiring an understanding of patterns, price movements, and entry and exit points. Risk management ensures that losses don't spiral out of control, with traders generally risking no more than 1 to 2% of their capital per trade. Trading psychology involves emotional control, helping traders to avoid impulsive decisions driven by fear or overconfidence. Money management preserves and grows capital by setting stop-loss orders, calculating position sizes, and managing capital allocation effectively. By mastering these areas, Trader B builds a strong foundation for sustainable, profitable trading. Start the trading challenge with a low-risk strategy. After building core skills, both Trader A and Trader B can begin real trading by entering 2 $5,000 trading challenges. Each challenge costs $32, totaling $64, leaving a small reserve for fees or minor expenses. In Phase 1, traders should risk only 1% per trade, aiming for a 3% return per successful trade. This cautious approach helps them navigate the phase with minimal risk. In Phase 2, traders reduce their risk even further to preserve capital, aiming for a 5% cumulative return to complete the phase. Upon passing both phases, they receive a funded $5,000 account, marking the first step toward consistent earnings. For Trader A, who has prior experience, this phase will likely progress smoothly. Trader B will rely on their new skills and build confidence as they complete each phase. Generate monthly income with funded accounts. With a funded $5,000 account, both Trader A and Trader B are now positioned to generate monthly profits. The target is a monthly return of 3 to 6%, which translates to $150–300 from a $5,000 account. It's crucial to reinvest part of these earnings into new challenges or to fund larger accounts, setting aside a reserve for trading fees and potential losses. After 3 successful payouts, traders should consider adding a larger account, such as a $10,000 or $20,000 account, to further increase earnings. Larger accounts provide higher monthly returns without needing to increase the risk percentage per trade. This consistent reinvestment and scaling approach enable both Trader A and Trader B to build capital steadily over time. advancing them toward larger profit goals. Use the account flip technique to grow capital quickly. As profits accumulate, traders can try an advanced technique known as the account flip to accelerate growth. By setting aside around $346 from payouts, traders can divide this capital into 5 equal portions of $69, risking 1 portion per trade. Each trade should aim for a 3x return, allowing capital to grow quickly with each success. After each winning trade, traders reinvest profits, building momentum. In 6 to 7 trades, this capital can potentially reach $3,000, significantly increasing available funds. At this point, traders can either continue flipping to higher levels or withdraw some profits to diversify into larger funded accounts or alternative opportunities. This technique is higher risk, but offers significant rewards, especially for traders with a reliable edge. For those with a strong strategy, it's an efficient way to scale capital for larger investments. Transition to high-capacity accounts. Aim for $100,000 challenges. Once traders have established steady income with smaller accounts, they should consider investing in larger accounts, particularly $100,000 challenge accounts. Each $100,000 challenge costs around $500, making it attainable once traders have accumulated sufficient capital. Larger accounts offer greater profit potential while following the same risk management principles applied to smaller accounts. With a 3% monthly return target on a $100,000 account, traders can earn around $3,000 to $5,000 in monthly profits, depending on consistency and risk tolerance. Holding 2 $100,000 accounts allows traders to earn monthly payouts of up to $10,000, moving significantly closer to their 6-figure goal. As profits increase, traders should reinvest part of these earnings into new challenges or larger accounts to continue growing capital and sustaining a consistent income stream. Maintain psychological resilience for long-term success. The path to 6-figure profitability is not only about numbers, it requires a strong psychological foundation. Traders often face emotional hurdles such as overconfidence, fear of missing out, and fear of loss. These challenges can derail progress if not managed properly. To keep a balanced mindset, traders should avoid overtrading, as it can lead to impulsive decisions. Instead, they should focus on quality trades aligned with their strategy. Developing emotional discipline is essential for sticking to a strategy, especially during losing periods. Regular breaks prevent burnout and help traders stay focused. By stepping away from the market occasionally, traders can reflect, adjust strategies, and return with renewed confidence. Mastering trading psychology helps traders stay level-headed in difficult situations, maintaining consistency and resilience throughout their journey. Reinvest profits strategically to compound earnings. Once traders reach consistent monthly payouts, reinvesting these profits strategically is key to building a 6-figure income. Traders should allocate part of their earnings to take on larger trading challenges and diversify into higher capacity accounts, such as $10,000 or $20,000 accounts. This strategic reinvestment creates a compounding effect that grows monthly returns over time. For instance, if traders consistently reinvest a portion of each payout into larger accounts, they can scale their capital rapidly, enhancing their earning potential with each investment. By methodically increasing account sizes while maintaining conservative risk management, traders position themselves for sustainable long-term growth. Reinvesting strategically is a foundational practice for achieving 6-figure success by the end of 2025. Stay disciplined and commit to continuous improvement. The journey to 6-figure profitability requires discipline, patience, and a commitment to continuous improvement. Traders must stick to their plan, even in the face of setbacks, and make adjustments as they progress. Regularly reviewing trades, analyzing mistakes, and refining strategies is essential to becoming a more effective and profitable trader. Developing trading skills is a long-term process, and success often comes through incremental improvements. By staying focused, adapting to market changes, and learning from each experience, traders build the resilience needed to reach their financial goals. Continuous self-improvement, combined with a disciplined approach, will ultimately lead traders to achieve the 6-figure income they set out to earn by the end of 2025. Thanks for joining us on this journey to six-figure profitability in 2025. If you found this video helpful, make sure to give us a thumbs up and subscribe. Share this with anyone you think could benefit, and let's make 2025 a year of growth and financial success together. See you in the next video.